Okay, so the decline in the KLCI continues into the second month, soon third month of 2025. You can see here there are three charts. You have KLCI, IBM 70, and then the small cap, right, which is IBM S cap. Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. So this is the sector breakdown.
Yeah.
You can see, right, that only banks and REITs are doing well. The rest are feeling the heat. And the biggest losers are tech, healthcare, and utilities. So there are two companies over the past week that we've been following actually in the past year or so that really declined a lot. Disclaimer, we don't own any shares, but they were linked to e-invoicing. So if you recall, when the Madani government took over, part of one of their agendas, one of the main agendas is to balance the budget, and to balance it, you have to cut costs and get in more revenue. So cost cutting, we all know the story a bit better, right? Subsidies removal, targeted subsidies, things like that. But on the side of revenue, apart from improving, upskilling our talents and getting investments in and all that, these are more long-term stuff. More short-term measures that the government can use to increase revenue is to actually improve collection. So the economists indicate, and based on their research, that 40% of Malaysia's GDP is actually not accounted for, meaning to say, all else being equal, our tax revenue can be 67% higher actually. So one way is to improve the collection, and one of the ways they improve the collection is to improve e-invoicing. So these two companies were actually affected positively, but then now not so positive.
Yeah, so previously the catalyst was that because there's a lot of companies that need to transition from the traditional invoicing to e-invoicing. That's why there's a rally. But right now, the reason why it went down is because the latest news by the government that they say that for below companies that is making below 500,000, they're going to be postponing the e-invoicing. So initially, by right, it was supposed to be by end of this year or some sort that every single company must have e-invoicing. But right now, they are kind of giving some delays for this company, especially for the 150,000 ringgit in terms of profit. So that one, they say they're going to be examining for that one. Then for 501, that one is they're going to delay until next year. So that's why I think the reason why it dumped is because there will be lesser revenue being captured for in the upcoming quarterlies. So that's why it kind of dumped. Okay, so second sector over here we have 99 Speedmart, DIY, and
all these are
Padini.
beloved companies, right?
Yeah. Now this dump is actually pretty strange because we know that the salary hike it was already announced already. So technically speaking, there will be more consumer spending in the market. But looking at the results, right, probably it's also because of the sentiment. Because in general, the whole market, I mean, you can see the sector, right, everything is actually pretty much down already. It also could be that Mr. DIY and also 99 Speedmart will be releasing their quarterly soon. So probably the market is going to be expecting them to perform well. But let's say they didn't deliver good results, then probably this tumble makes sense. It's the same for Padini as well. But this tumble is pretty drastic. It's 21% in just 2 months. Travel also pretty much down. Recently also, I think Tony Fernandez was inside the Age latest issue. So he being him again, he's being very positive with the PN17 liftoff, and he has been very optimistic about the company, and he thinks that Capital A is kind of undervalued is what he's trying to say.
Yeah, and I think the key thing here, and soon I believe Capital A will be, not to say not related, but it'll be less sensitive to travel because they're going to be more of a software company linked to
traveling,
travel related, which is Azure X in this case. But if you want a more pure play travel, it will be Azure X.
Okay, so that's traveling. Also down quite a bit. Gloves. This one is the most. I would say you can see that in just a single day, it tumbled 37%, quite a lot. And the reason why it went down is because the outlook that Hatta Legas management painted it wasn't very good. Basically, they say that the utilization rate will reduce from, I think, was around 86% to 70 to 75% next quarter. And then they also did mention that the US customer that they're selling to, they actually stockpile a lot of these glove Chinese medical before the tariff. And actually, we did talk about this in our Fire Pro, our monthly webinar already. So it's actually a known fact already, especially for the local institution. That's why the recent rally, right, that one doesn't really make sense when it went up because of the tariff when Trump announced the tariff, right? And then now, finally, everything is the reality is hitting the fan already, and all of these companies are tumbling. But you can see that so far, only Supermax didn't really tumble as hard as compared to the big three. They only down like 21%, whereas Harta Lega is down 37%. And the reason why they are down also is because the foreign funds are actually the one that is selling a lot. And the one who is buying back is actually retailers. So yeah. Okay, OSAT. Yeah, so they also are doing pretty bad. Inari also, we got this information that their net margins will not be at 20%. Previously, they've been making like a pretty good money for the past 4 years. But right now, the management did say that outlook is going to be bad. And net margin most likely is going to be around 15%, which is around 2014 to 2017 to 18 level. And back then, the share price also was around like 1 ringgit 80 cent to 2 ringgit 20 cent. So it's actually a pretty dire state. And PI also did mention the customer, one of the customer actually demanded, not really demanded, but they tried to negotiate. They say, can you drop price to 40%?
Yeah, it's tough.
Yeah,
it's
yeah,
tough
it's
now
tough.
for OSAT.
Yeah. And especially Intel also, now Intel is facing like some sort of like, I would say restructuring at the moment. There's a lot of uncertainty with that. And then their plant...
Usually there's a pause, right?
Yeah,
the
correct.
Plant in Malaysia, in Penang, right?
Yes, exactly. So that will kind of like make our advanced packaging dream to put on a hot right now. So there's a lot of uncertainty around this OSAT industry. Now, another spectrum of tech, we have Dufu, SFP, Great Tech, and Penta Master. So SFP, this one is the most, I would say, correction. About 45% is already a crash already for this company. And also the reason why they say is basically the projected revenue will be much lesser as compared to last year's. I think it's going to be going down like 30 to 40%. So that's why the share price also did tumble like 45%. And not only them, I think our research analyst is also going to like attend me Technovation's briefing. So whenever there's like there's update, we will let the Fire Pro members know.
Yeah,
so
correct.
If you guys want to join our Fire Pro, make sure to click the link. There's a 10% discount off in the description as well. Okay, AI also, everything is down. PIE, NationGate, YTR Power, and also YTR Corporation. Now, there's an interesting news recently about Microsoft. They kind of like have been pretty much cutting their spending on AI already, data center, in the US. So this is quite crucial because it goes to show you that they think that they kind of overspend already. And now they are trying to pull back some of the money from spending more in terms of data center or even AI. So this is kind of a big news. And you also can see that today's some of the companies like NationGate, YTR Power, and YTR is dropping.
To your point, there's actually two thoughts about this. On X, people are discussing this sort of Microsoft pullback in spending and all that. The two thoughts is that it will affect Malaysia negatively. But what we are seeing on the ground now is that like recently there was an acquisition that they made from EcoWorld, right? So I hold this other view, which is actually they will spend more in Malaysia. And the reason is because land, right? Our land is cheaper. So the thing is you can't really stop spending on AI, right? It's like if you've been following the pace of AI over the past since ChatGPT launch, which is late 2023, the pace is just crazy. Now more like recently, Elon Musk, through X, he launched Grok 3. I mean, it's phenomenal, right? That Perplexity, of course, DeepSeek, OpenAI as well. So the pace is so crazy. You can't actually stop spending on this. What you can do is you can reduce the spending, but you actually do not reduce the capacity. Because if you reduce capacity, you will hamstring your ability to grow your AI, because you need to keep training the models, right? And so you need space to to store a lot of the data. So so I actually think it's a bit of a positive that Microsoft is downsizing. So they're getting rid of their US plants out there and coming over here, which is quite ironic because that's not what Trump wants, but you know, it is what it is. Luckily, we are not highly advanced chips. Yes, correct. Luckily.
Okay, so the next one will be oil and gas. I think this one is already a known news. If you watch our previous video, you can click the link over here. PChem, Dialog, they are all struggling because of accounting treatment also. But however, for PChem, it's more towards the oversupply situation in the North Asia countries. They kind of like not over-expanding, it's expanding a lot in terms of the petrochemical capacity. So that's why everything is down. Hibiscus being hibiscus, this one has been going down since God knows when already. Yeah, so these have to do with the Brent oil, and also obviously you want to see whether Petronas is spending money for them to actually do more exploration work. But right now Petronas also is struggling and they're kind of like downsizing or right-sizing their organization. So far the oil and gas outlook also has not been doing so good. Okay, now you think that you think that every single sector, right? We haven't even covered IPO. So
yeah,
IPO, you can see that on the first day already, Rich Tech Store,
70 cents to 25.
Yeah. The moment the list,
fantastic.
Straight away, everybody like kind of like panic sold and everything. It just went double, like it went down 70% ish. And you also can see that there's an interesting guy over here, which is Mr. Wong Kun Wai. He is actually the non-executive director in Rich Tech. He sold about 1 million shares. Now, keep in mind, he actually owns about 1.24 million.
Okay.
So right now his stake is about 242,000. So he sold exactly 1 million at the top over here.
Wow.
Yeah, and he made a huge profit, like a 3x.
He knew, huh?
Yep.
Maybe, I don't know.
He knew something.
Anyways.
Yeah. Okay.
Yeah, so these are some stats that you pulled up, right? So basically, just to explain to people what this table means is when you compare it to IPO price, so first day meaning at the end of 5 p.m. on the first day, the average, right, it goes up the number of stocks that actually goes up is 8.5% only. Drop. Sorry, so that means 91.5% actually go up.
Money. Yeah.
So then the second scenario is if you now, so this is the 22nd of February, from the IPO price, only around 2/3, right, went up. Now, of course, different stocks have different starting points, IPO price, but yeah, this is basically it. And then if you compare it to the first day, which is the end of the first day, versus now, everything flips, right? 40% of companies only go up, right?
Yep.
Or only 40% go up.
Yeah,
so the message is, if you ever get IPO, sell on the first day.
yeah. Basically it. And you also can tell why a lot of people sell on the first days, because you can see like companies like Venzo, they also just recently listed, but right now they kind of reported loss making. Now this loss making is not even accounted. Let's say if you adjust your IPO listing, right, they are still making losses. And the reason why they're making losses is because they spend a lot of marketing expenses, which is in theory it's good for the company, but obviously the market doesn't like it when you are not making money on the first day, or at least the first few months after you list, right? So that's why all of these companies are taking a tumble, whether it's on the first day or after a few weeks after they list. And then you can see in general, this is actually the top 160 fund houses for unit trusts. They're all actually making losses at the moment.
Average,
from year to date until the 20th of February. And you can see the average right now is negative 5.58%.
Yeah.
And the best returning so far is 1.27%.
Nice.
Yeah, and that is PB growth. So yeah, right now it's basically every single fund houses are actually just in the red.
And also selling, I think this contributes, right?
Yeah, and this is actually at the all-time low already. So whether the dips will get deeper, we shall see. But so far, I think we are kind of close towards the end of the sell cycle. At least that's what I feel. Because right now, the sell-off is actually pretty much of I would say it's quite irrational already. Everything's on a steep fall. However, which is also a good thing for value investors. If let's say you've discovered companies that is trading at cheap or at fair value, probably that is the right time for you to maybe consider getting in. So final thoughts over here. The only few companies or sectors that actually managed to put it on the green is actually plantation, REITs, financial and logistic. REITs and financial, this one is more of a defensive, more stable. Logistic, this one I'm not sure why they went to the green. Probably also is kind of like muted growth. But plantation, this one, so far a lot of analysts thinks that they can outperform for this quarter. So yeah, this sector, the one that is only performing right now is plantation. Now the second one we have over here is are we going to blame Anwar because of the drop in stock market? Because there's some of the discussion inside of Fire Pro also, because he has been pretty much not really trying to communicate with the US.
Yeah.
I mean, they did try to call, but the US didn't really pick up their phone call.
Yeah.
So it's kind of like a sign that, you know what, probably Anwar did trigger the US in some way. In this case, it's kind of like related to the Israel and Hamas war.
Yeah, correct me if I'm wrong. I think now the US is the second largest trade partner after Singapore, which means China is actually lower now, right? So that's why I've been saying there are two issues. Now, I think with the Israel-Hamas condemnation, you can ask him to soften, but you know, how much can you do, right? It's a humanitarian crisis. But I think a bigger issue would be the BRICS conversation. I think that never made sense to me, because you can get the gains from, like, what is it going to change with China, right? That you're not going to make necessarily new gains by joining BRIC, but you sort of, not to say alienate, but you give the US a reason to dislike you. And I've always believed as Malaysia, we need to be equidistant, meaning we cannot be on one side or the other. We just same distance, right? So, I mean, it's hard to say, but I guess, now he has to not be as gung-ho.
Needs to chill a little bit.
Needs to be friends. Because, I've been listening to a lot of President Trump's team, and they are surprisingly really, like, they're very high quality. Like, if you can, like, Secretary of State Rubio, JD Vance, they're really communicating. Of course, Elon Musk, all these guys, they're really communicating, and they're really, like, they're saying the right thing so far, right? So we'll see.
Okay, the last point, whether this is an opportunity. Personally, obviously, I think it is an opportunity because of the steep sell-off, and also kind of feel like it's kind of like irrational already to the point where fund houses are thinking that this is the end already. But if let's say you're still afraid of this market, we actually have this Mumu Cash Plus program over here for you, and you can actually make 5%, which is better than what the fund houses are making right now. So if you are to outperform the fund houses for this probably 30 days, you can go for Mumu 5% guaranteed return. You can just invest in their money market fund over there. And make sure to key in our code FIRE24 to get a 40 ringgit cash voucher. And if you want to know what is the sequence or what is the entire process of the Cash Plus program, is over here, the picture. You can just pause and have a look. So what do you think about today's sell-off?
I'll just repeat yet again, always have a grocery list of companies that you buy. This is what we've been saying. If you've been following us since 2024, 2024 is a good year, right? So when it's a good year, people cheer, celebrate, but they don't have that grocery list for moments like this, and things could get worse, right? So now when it drops, then people start to scramble for new ideas and all that. Whereas at least a lot of our Fire Pro members won't face this issue, because there is already a grocery list for people to look at. It's not a buy or sell call, but at least now you got names to then consider and then make a decision.
Yep. And also, just to at least put some hope.
This is really good. I think this is one of the best news. If it comes through, I see.
Yeah. So the executive or chairman, if you guys didn't know, basically he did some sort of like an announcement that he wants to actually be more minority shareholder friendly for the market. So what that means is that obviously companies that are underperforming, they never deliver, like, let's say, returns on equity at a certain level, or maybe they always make losses, right? He thinks that these companies should be delisted. That's number one. Key thing is very good. Number two is that he thinks that the company should start to give some sort of guidance in terms of whether is it dividend, earnings or whatsoever. I think this is also a good step so that it kind of like even the playing field for every single investor. Because right now, majority of the guidance are only given to the local institutions or even foreigners. So the retailers are always the last one who get the information. So with this guidance, I think it will also be pretty good. And last one, I think this is the most, the best news ever, which is actually distributing back returns to minority shareholders. Yeah. So basically giving out companies that are actually holding a lot of cash or have low dividend payout, have low price to book ratio. Basically, he's trying to say that we need to be like Japan.
Yes.
Whatever thing that we have right now, net cash company, just
that's the key actually. So Malaysia operates as a whole. We always defer to a more advanced country, right? So a lot of policies, we look at what Singapore is doing and we try to do the same, and things like that. Mate has the famous, Tunam has the famous Look East policy. So now when Japan is being brought up, it's great. And recently Warren Buffett spent an entire page talking about his Japanese holdings and how it will likely increase over time. So this is a big positive. I hope they can execute it fast, because Malaysia has a lot of, I don't know if you've done the math before, but there are some companies that are 1,003%, right? The cash,
correct,
right?
Correct.
They like for every 1 ringgit of share price, they have 13 ringgit in cash, right?
Yeah,
So
one of them is like 16x the market cap.
Yeah, there you go. So like, just pay out a third, right? You pay out a third, it's a 4x already, right? So there's a lot of companies like that in Malaysia, and then we should just push these companies to pay out. And then who doesn't want cash, right?
Yep. And also we did share some of these companies inside our Fire Pro.
Yeah,
so if you guys didn't know, it's actually one of the write-ups over here, and this is the return so far for the FPM, 45%. FPG, we're going to be updating the February return very soon. Probably it's going to be next week already.
So FPM is probably down a bit more.
Yes, or maybe like stagnant a little bit.
Okay, but
FPG is going to be going up. Because FPG, if you guys didn't know, we invested heavily.
So we're into China a lot earlier than whatever is happening now. So
and China is booming, so that's a good thing. The boring portfolio is going to be also kind of like stagnant a little bit. But anyhow, if you want to know what is the censored names over here, you can check out Fire Pro using our 10% off in the description and comments. And if you want to know how we do our write-ups, we also did posted a new thing, which is called the management notes.
Yes.
We posted 3. So if you want to see how
we get that exclusive information, so that you get it fast, the information,
Yep, and it's totally for free. You can check out how we do it inside the Fire Free sample. It is also in the description and comments. So that's about it for today's video. Stay invested. Obviously, don't panic. Just chill a little bit. If you guys are you think that the market is gonna go even down, just take a few days. Don't look at your trading app or whatsoever. Just take a chill pill and just continue doing research. So that's about it. See you guys next week.